So Robert's question via email is, what is the best method for identifying highly liquid ETFs with options which also have high historical volatility? So the way he phrased this is he's looking for liquid ETFs, of course, that have options. Well, anytime you do any strategy search on PowerOptions, you're only seeing ETFs with options. But in addition to that, there's options which also have high historical volatility. And I think he means implied volatility. Implied volatility relates to the option itself, the future-looking expected fear gauge of the options based on any upcoming events, fear in the sector, things of that nature. Where the historical volatility is a past 20-day, 50-day, 100-day, 350-day trading range or trading average of the stock itself. So you can use both on PowerOptions. You can look for historical volatility, which is related to the past trading range of the stock, or you can screen directly for implied volatility. And to find liquid positions in any search, we will just, of course, use the average stock volume. Now let's go ahead and pause this screen here. We're going to switch over now to PowerOptions to illustrate searching for the concepts of Robert's question. And we're going to take a look at some other concepts one would need to consider when doing this. All right, so we're over here now at our PowerOptions webinar account, a free 14-day free trial. There we go. And we're just going to go directly, let's say, into covered call to create a specific search. Let's just say looking out to March expiration, 19 days away, 15 days away, for high liquid ETFs with a high implied volatility and perhaps a high historical volatility. So let's just go to covered call, and then we're going to go directly into the search tool. When I open the search tool in any specific strategy, we're going to see the listed trades based on one of our default searches. And this one happens to be one we looked at a while back. We were playing around with the May 25th search during one of our webinars. But what I want to do is scroll down here to the parameter field. And my first step, whenever I have a specific type of search that I want to do, and I don't even know if Robert's doing covered calls. We're going to address that in a moment. We're just using this as an example. What I want to do is click the Clear Filters button up here in the right-hand corner at the top of the parameter field below the listed trades. That's going to empty out all of our technical, option criteria, fundamental criteria, and anything else. The first thing I'm going to do is select my expiration date. We're just going to use March, 15 days away. If I wanted to look at a range of expirations, say from 2 days away to 20 days away, I just leave it at all expirations and put the days to expiration field in. But we're just going to stick with the standard March expiration. Now, before we do anything else, I'm going to go into the lists field. And Robert mentioned he's only interested in looking at ETFs. So here in the stock list field under the lists, we have a set of company lists for you. And anytime I create my own personal list, I can screen against it. But we're going to start off with just indexes and ETFs. So we're telling the system we only want to see covered calls with a March expiration against indexes and ETFs. We can't buy the underlying index, so most of those are going to be filtered out anyway. He wanted highly liquid ETFs. So first I'm going to go to the technicals. And here's that average stock volume. And this is measured in thousands. It's the average over the last 90 days. So if I only want to see ETFs that trade on average 1 million shares per day over the last 90 days, I'll use a measurement, average stock volume greater than 1,000. Also here we can see the historical volatility. This is related to that trading range of the stock, but I think that Robert was referring to the implied volatility of the options being higher on high volume ETFs. We'll come back to historical volatility as well. But the next thing I want to do is just go into the options criteria, and I want to set in an implied volatility that is above the average volatility. What would we consider a high implied volatility for an ETF option? Now, right now, I'm going to pause for a minute And we have to answer that question first. What is an average implied volatility right now? Well, we have that for you. On PowerOptions, if you go into the Home tab and we click on Learning Center, we can access a variety of different help menus, webinars, strategy help pages, and so forth. But what I want to do is go into this link for market activity. And this has its own separate menu where we can look at earnings announced this week, ex-dividend dates, 52-week highs and lows, market statistics, and optionable stock statistics. The optionable stock statistics table gives us a range of different stock and option criteria with the high, minimum, maximum, I should say, and the mean for various indicators. Earnings per share growth. The average right now is 6% earnings per share growth across all optionable stocks, ETFs, and indexes. Well, the indexes and ETFs don't count their earnings per share growth, of course. Well, we have PEG ratio, sales. Scroll down here further, percent range, and implied volatility, and the historical volatilities. Volatility of 20-day for the stocks, 50-day, and 100-day. Right now, the average implied volatility is 0.93. So if I was looking for high implied volatility, I might consider looking at better than greater than the average of 0.93 right now, right? Well, there's a caveat. I also want to note here that our average 50-day volatility is 0.51. Well, 0.93, average implied volatility across the market right now, pretty high. But Robert's question was asking about highly liquid ETFs with high implied volatility. And what do we know about ETFs that are going to have high liquidity, high volume, very liquid? Might be considering, hey, I want to see the ones on maybe QQQ or TQQQ or SPY or DIA. The implied volatility of those options aren't going to be anywhere near where the standard stocks implied volatilities are. The options for the standard stocks implied volatilities are. They're going to be a third or a fourth of that. You know, if I'm looking at stocks in the old days, before the pandemic, when things were calm, things were bullish and moving up, you might consider Apple, for example, had an average implied volatility for the next two expiration months of probably only around 0.3. At that time, SPY was probably around 0.12, 0.14. And not that high at all, nowhere near 93. So the rest of the market moved up, but still, the broad-based ETFs, if that is what you're interested in, with looking for the broad-based ETFs that still have a high implied volatility on their options, high implied volatility for those still might only be 0.2 or 0.3. So let's start off with a basic range. Greater than 0.20 for the implied volatility of the options, March 15th expiration, any ETFs that are over 1 million shares per day. At the same time, we're going to look for liquid ETFs. Let's look for some liquid options. Let's look for some open interest of just greater than 10. No, let's do that. Let's do an open interest of greater than 50 and an option volume today of at least greater than 5. Any option that matches this criteria. Let's go ahead and run the search. And here's what we would expect to see. I'm going to have to make a change to this real quick, and that's perfectly fine. We see some ultra short silvers. China 3 times bull ETF. XRT is in here. The retail ETF is there. Now, I'm only sorting right now. Oh, I'm sorting just by the stock symbol. I'll just do that. Okay, so we're going to go highest to lowest. Okay. And VIX short-term ETF, UVXY. Current underlying highest volatility, Robert, in that case. But again, there's two things that we also have to clear up here. This is the ultra. It's 2 times. Short ETF. Robert didn't mention if he was interested in a bullish or bearish strategy. So if Robert was interested in a bullish strategy, what we'd want to do is remove any inverse ETFs. So we'll go back to our list field. And we'll scroll down here and we can remove the inverse ETFs or we can move the inverse and leveraged ETFs, or just the leveraged. I'm going to start with just removing the inverse ETFs for the time being, because we're looking at a covered call, neutral to bullish strategy. So let's remove those. We still have these ultras in here, and that's kind of counterintuitive, isn't it? Because VIX, UVXY, things of that nature, they're counter market as well. They're not considered an inverse, but they are counter market. Oh, this is the short. So yes, it would be bullish in that case. So let's just take out all of them. Let's just take out the inverse and leveraged ETFs and remove those from the system. All right. So sorting by that highest volatility, let's add some more columns in. I want to add directly implied volatility from our fields. And I'm going to also add in the historical volatility. I think it was up here. There we go. And the average stock volume, of course, as well. We want to add that in because that's something that we're using for our filters. All right. And I could add I might as well add the percent implied volatility range as well, just to make it even there. Okay. Let's see, do I want to add anything else there? Oh, sorry, folks, it's about to pop up. Okay, so let's just go ahead and do that now. We submit it and ask us to refresh the page. Okay, so implied volatility of the options, not quite at 0.9 what we were saying, but these are the highest implied volatility options on standard ETFs, Robert. I'm sorry, with, of course, that volatility that we wanted and some liquidity for the options, and removing the inverse and the leveraged ETFs as well. Now, if this was a covered call, and again, I don't know what strategy Robert's doing. I see a listing, of course, many repeats for positions, but I see some downside protection I wouldn't be interested in. Positions with only a 1%, 1.2% downside protection, far out of the money. So let's just change that. If this was a covered call, I'm going to look for a downside protection of at least 3%. And I want a percent if assigned of at least 3%. I probably don't want to go more than 3 strikes out of the money or more than 3 strikes in the money. Well, let's just see what we get. So we're not going too far in, too far out, having the range that we want. Now we've got it back down to 49 results. MJ, Alternative Harvest ETF, a short-term VIX, VXX, the ETN. Junior Silver Miners, Invesco Solar ETF. There's XRT again. Okay, let me go to the farthest page, page 3. XME, XOP, here's the ARCs. They've been taking a hit recently. Most of them have, I should say. FinTech innovation, this and that. Now, why am I going to these final pages? I just wanted to see if anything's there. All right, EWZ, KRE, and AMJ. What did I not see in any of those pages? I did not see SPY. I did not see QQQ. I did not see DIA, and I didn't expect to, because they don't have as high as implied volatility as we want, and they're for 15 days not going to offer a 3% downside protection. And likely, in the range that we want, they're not going to be the at the money or slightly in or slightly out, offering at least a 3% downside and a 3% return, because they have a lower volatility. So that's the question you want to ask yourself to go further. This is the process of what you would do, Robert, to identify positions that are highly liquid, looking just for indexes and ETFs, and maybe avoiding the inverse, of course, if you've already determined a bullish or bearish structure. You're doing spreads, you're doing bullish spreads, you're doing bearish spreads. You may want to include the leveraged, depending on how bold you are. Those will have higher volatility, implied and historical. And they might still be liquid as well, but they take the extra risk because they're doubles and triples also. And we want to look for a basic implied volatility, and of course the return, downside protection, and the options liquidity does not hurt as well. Let's take a brief look at just the option chain for SPY, for standard March expiration. And we'll take a look at just the calls again, as we were looking at covered calls here. We have to select our proper expiration of March 15th. I'm sorry, it's not March 15th, it's the 19th. I apologize, folks. There we go. And we're looking at the small chain here. And I just want to look at the calls. Okay, so we go down here. Let me adjust the columns. I wanted to go to the calls for a specific reason, and so that we could see the downside protection, percent return if assigned, of course, and as the covered call return to see if we're meeting our criteria. And of course, possibly the open interest and the volume. There we go. Okay. So let's go near to at the money. And this is SPY. Sorry, folks. There we go. SPY 383.63. The implied volatilities in the money are above the 0.20 that we were looking for, Robert. 0.2106, 0.205, that's great. What do I not have? That 3% return and 3% downside protection. If I go down to the 3% downside protection in the money at 376, implied volatility we wanted, but probably not the historical volatility. If we'd put in a range of 0.5 or 0.6, it wouldn't be that high, but we're only seeing a 1% return if assigned. To get to the higher, 1% return if assigned. To get to the higher 3% return if assigned out of the money, we're only at a 0.4 downside protection. That's not meeting our goals, and the out of the money implied volatility is not there for the calls. So if your question was related to finding highly liquid ETFs, because you're looking specifically for the common market ETFs, IWM, QQQ, DIA, and SPY, well, you might be in the right implied volatility range, and you're going to have the right average stock volume, but you're probably not going to see the returns that you wanted. If you increase this up to a 0.3 or a 0.4, just throw those broad market ETFs out of the window. They are not going to be there. They don't have that implied volatility that you're looking for, or they will have the average stock volume. Okay, so that's where we're going to stop the conversation right now for Robert related to searching on the tools for ETFs with high liquidity, high implied or historical volatility, and the reasons why you might not be seeing the ones that you want in that scenario, based on what strategy you're looking at and what kind of goals are there as well for those positions.